I love it. I love it. This is Money, Money, Money by the OJs. I know it's a throwback, but it's so good, right? Actually, it's the OJs for the love of money. So there's a little bit of a correction there. Good morning to you all. The date is August the 11th, 2022. My name is Kyla Barnes. I am your financial chef and coach, here to make your best financial dish, whatever that looks like. I want to make sure that we can partner together to get you to where you want to go. A few things on deck here. This again is going to be one take, one message, no splicing or editing. I have 11 things to tell you in 11 minutes before 11 o'clock. Oh, can I do it? I don't know, but I'm going to try. But good morning to you. Hopefully you slept well. Hopefully the sun is shining or that you feel good about your day. Even if you don't, just hang out with me for the next 11 minutes and maybe you'll feel better. Who knows? Let's go ahead and try it. As I always start my podcast as well as my YouTube with a quote. The quote today comes from Oscar Wilde. He says, "Be yourself. Everyone else is taken." I like that. The second thing I wanted to quote was George Bernard Shaw. He said, "Both the optimist and the pessimist contribute to society. The optimist creates the airplane and the pessimist the parachute." A little humor to get you started. We have some good things happening in the market today. We have bounced off of our lows, which is great. That's the first point, that we bounced off our lows. I will put up a chart after our conversation today that will show how strong the markets are doing. Right now, the time is 10:16. The market's open at 9:30 Eastern Standard Time. As soon as they opened, they immediately shot out of the gate. It was so awesome to see. Yay! Hand clap and ringing that bell. Ding, ding, ding. I know, right? The markets opened at 9:30. They went up 219 points. Right now, I show that the market is trending up by 300 points. That's super positive. The thing that powered the market today was the producers price index. That's going to be the individuals, the manufacturers who are actually purchasing the products or the raw goods first for us to make a finished product. Like if me and you were to go to Hobby Lobby and I don't know, buy paint, make a beautiful paint on a canvas with everything, with stencils, with the paint, with the gesso, or even with the primer, and then we sell it. We would be the producers in that instance. That producer's price index dropped by 0.5% compared to an estimate of a gain. Super excited. The markets are charged to hear that information. Also, the CPI for July on Wednesday came in at 8.5%, which is better than the 8.7% the analysts expected. Super positive. And the core CPI, which came in earlier this week, was under forecast at 0.3 versus 6% month to month. Positive information yet again. Still at 5.9% year over year. That's for the core CPI. Core CPI will strip out energy as well as food. CPI includes that. CPI was unchanged. Whoa, that's 6 points right there. And they're still tracking that at 8.5%, which is down from the 9.1%. These numbers are looking good, and it is propelling the market to go higher. We have bounced off our July lows, which is impressive because July was an up month for the markets. We have bounced off of our June lows, and we have retraced May. What does that look like? I'm going to put up a chart here. This here is a bell curve. This is the left side. This is the right side. The market slid from the left side all the way down to the right side. I know it's going to look a little crazy, but the more that this recovery is slower, so if I could just expand this out, if my fingers were longer and it looked like this, put that in focus. That would be somewhat of a stacked recovery. It would be consolidated trading, and it would be less volatility. But what we experience sometimes in the market is we get a V-shaped recovery. So I'm going to try to do this here. No gain signs here. But a V-shaped recovery, which this is the left side and this is the right side. The more we can, when there is a V-shaped recovery, there's usually a lot of volatility that propels it all the way down, and then there's sharp volatility which propels it all the way up. Sometimes that sharp volatility is related to people closing out their short position. It could also be some institutions who decided that this is a good entry point for buying. It could also be just traders like you and me who decided that there's enough momentum on our side for us to continue to push this market forward. The market is a very dynamic vehicle, or a beast, as some people say. It is driven by demand, but there's also a lot of mathematical components in there too that drive when it goes down as well as when it goes up. Feel free at any point in time to like and subscribe to our channel, as well as even if you want to set aside a consultation to cover this a little bit more in depth. That's what I'm here for, as your financial chef and coach. You can always send me a message at www.onegingles.com, and I'll have that on the screen for you as well. I wanted to offer a tip for you here, which will be the 8th point. You can make money if you are either first to procure it, to make it, to find it, or solicit it. That's just what I feel. I know someone famous has said that. At this time, I don't know who that person is. But if you're first to do a thing and first to brand a thing, then you're going to be first to bring in revenue from that. So with that being said, my tip for individuals who are listening to this is to buy ahead of season. Buy ahead of the trade a few months. So right now we're in August. Back to school is already done. We're looking ahead to September, October, November, and ultimately Christmas. Right now is a great time to be building your Christmas list. How much do you want to spend? You can save more by allocating that amount over a series of months versus waiting till Black Friday to decide, how much am I going to put on the credit card, or how much am I going to spend out of pocket? That's something really to consider. When you buy ahead of a season in the market, wow, will that set you up for success? Several decades, I have bought oil in the middle of summer. Right after Memorial Day specifically. That's another tip. Wow, I'm doing great. That's tip number 9. I have purchased oil and crude sometimes right before winter got bad, especially in climates that experience a 4 seasons climate, or if there's just more of a need for natural gas. I usually like buying consumer discretionary in the slump of the summer. So for us, that would have been June. And then right before the Santa Claus rally starts, which it can vary. I've seen some years the Santa Claus rally started in August. I've seen other times that it started in October. But I buy consumer discretionary, which is the shirt, this PC, anything that is really in the tertiary sector of the economy, or anything that's in like services, for me, myself, to be able to produce a certain amount of money that I need, or that I would like to have before the end of the year. It's just how I trade. Point number 10, a little bit about me, is that, I don't come from money. It's okay. It's just my story. My parents tried. I think they did a great job. I think I'm a pretty fantastic person. But if you are like me, it takes sometimes for you to be convinced before you do a thing. You need to see the proof in the pudding, and you also go slow. You just don't know what you don't know. So for me, when I buy things that are out of favor in summer and sell them probably near the top of the Santa Claus rally, to me that works. An example of it working is here recently I bought CCL. My purchase entry point was on 7/1. Bought it for about, let's see here. I think I bought it for $8.60. I'm trying to remember this. I sold it around 7/19 at 10/28. So that's going to be a difference of about $1.68. I purchased 470 shares. How did I come to 470 shares? I just used 4,000 and rounded up. And that took me to about $4,200 total. So when that moved $1.68, that's $1.68 times 470 shares. And if my math is correct, I'm just going to do this again. $1.68 times 470 shares meant that I made 789.60. So $789.60. Again, a person who doesn't come from money, and that's okay. I decided to sell when it was almost near the high, but I didn't sell at the high. Which brings me to another quote. On Wall Street, there is an adage or a slogan or a saying that says pigs get fat and hogs get slaughtered. I typically will not wait for the high. I also typically won't wait for the low. I enter every trade with a particular buy entry point and a sell entry point. And we can cover that a little bit more in a consultation as well for you. But the market right now, let's go ahead and check in. I believe I've already hit my 11 points, so I am rocking this thing. The market right now is up by 286 points. Wow, this thing is really moving. That's going to be on the Dow. Actually, it's up 307 points on the Dow at 33,616. The S&P is up 40 points at 4,251. The NASDAQ is up 136 points, which is really strong for the NASDAQ at 12,991.55. So all markets are trending higher. When I go to look at the S&P, particularly for charting purposes, I like to look at the SPY. That's another tip for you. So I think I'm on 12 or 13. The SPY doesn't work exactly as a correlation to the S&P for like one for one, but it does track a tenth or around that amount, give or take how things close, about a tenth of what the S&P is doing. And I do show here that the SPY is trading at this current time at... The SPY is trading at this current time, 1026 at 424.23. It's up 4.24 dollars. So that's a little easier to quote than quoting the S&P as a whole. Right now, I show that we have broken out of the support for June, as I covered a little bit earlier. We've also broken out of July. I'll put a chart up that shows this. With the SPY being at about 424, it looks like we are actually at the point retracing about the month of March. Super positive. The Russian war started towards the end of February, as I recall. So if we can get back up to at least, I'm going to say 450, that's on the high side. On the low side, I'm going to say 435. Then the markets are in a good position to go sideways, which is this way. Instead of it being like this, it'll be this way. And that would allow for us to go higher for the month, for the duration of August. A few other things I want you to remember is that the consumer sentiment is coming out tomorrow. Consumer sentiment tells or gauges what we feel or what the survey group of individuals feel about how the economy is going. As long as that's bullish, we're going to see another positive day. The University of Michigan, that's this consumer sentiment that's coming out on tomorrow, 8/12. Building permits, housing starts, that all comes out next week around 8/16. Retail sales is coming out next week as well. If that's positive, that's really going to juice the market. So that'll also lock in another week of positive gains out there. And GDP second estimate is due out August the 25th. The GDP second estimate is going to be the revision to the first estimate for GDP. As long as that is positive, we can definitely see some higher days, or at least that's just stabilizing where we are right now in the market. Anything positive is a good sign. So I'm going to take that and just continue to trade smart. You know, instead of looking at how much you can gain related to trading, think about how much you could lose. And also take some time to go through your closets, your cabinets, and observe where you're shopping, what you're buying, because those are probably the household names that you can build a position in right now. Whoa, I think I definitely hit you with 13 really, really strong pearls of data. If you don't think I did, that's okay. Contact me on the website, www.onegingles.com. And I am Kyla P. Barnes, your financial chef, here to make your best financial dish. Get out there, get trading, and have a fantastic day. We'll talk soon.